Well, what's going on YouTube? Welcome to the second episode of my YouTube channel, Investing in the Rockies. First off, I just want to start off this episode by saying a massive thanks to all the subscribers. Currently I'm sitting on 63 subscribers and over 420 views in the last video, which is pretty mind-blowing. I'm pretty pumped with it. Like I said to myself before putting out the first video, if I get over 100 views, I'll make a second one. So I've absolutely smashed that target. So big thanks to everyone for hitting the subscribe button. To those of you that are new to the channel, welcome to my channel, Investing in the Rockies. I'm an Irish guy living in Banff, Canada here, in the middle of the Rockies, looking to achieve financial freedom through dividend investing and earning passive income. So welcome to the channel if you're new. Today's video is just basically going to be all about how to earn an annual income through dividend investing. So I'm going to take what the average annual income is for an average Canadian, and I'm going to show you guys what it takes, how much it takes, how long it might take in order for me to achieve, and yourself as well, to achieve financial freedom. So after I've shown you what it takes and how much it takes to earn the average annual Canadian salary, which is about $52,000 or $53,000 a year, I'm going to share with everyone a few tips on how to reach that goal quicker. So without further ado, let me show you what it takes in order to generate an annual income of $52,000 or $53,000 a year with dividend stock investing. Alright folks, so here we have a dividend calculator from marketbeat.com. I'll actually leave the link underneath for anyone that wants to play around with this themselves. But we'll go through it here. So basically, investment type is portfolio. Taxable account, I'm going to hit no because I'm in a TFSA, a tax-free savings account. Annual distribution frequency, I'm going to say annually. Starting principal, we'll reduce that to say we'll start off with $1,000. We're going to make an annual contribution of, let's say, $5,000 per year. And we're going to delete that tax rate because I am with a TFSA. And the annual dividend yield, we're going to decrease that to 4%. 4 is the magic number. 4 is the number I try to aim for. Expected annual dividend increase per year. So we're going to go with TD's example here. They're actually growing their dividend on average at 7% per year. So we'll bang that in there. And then expected annual share price appreciation. So basically the stock market on average increases at roughly around 10% per year. But we're not going to even type in 10%. We're going to just be conservative here and say 6%. I think I've covered everything. Oh yes, so DRIP. DRIP just stands for Dividend Reinvestment Plan, and I've hit yes. This is definitely one of the most important buttons here. Basically that means that all your dividends you earn, you're not spending them on whatever you like. You're reinvesting it into the portfolio. All your dividends you earn go straight back into the portfolio to buy more stocks. Years invested, I'm going to say 20, but obviously the sooner you get invested the better. That could be, you might only be invested for 20 years, you might only be invested for 10 years. You could also be invested for 30, 35 years if you start young enough. So we're going to calculate dividends, and my internet just went. Oh. So that's it all calculated. We'll scroll down here and have a look at what happened. We'll get rid of that. So the ending balance of your account is going to be roughly $550,000 after the 20 years. Let's take a deeper look. So the first year here, you can see we started off with our initial payment of $1,000 and received an annual dividend of $40. This keeps increasing though. The second year we invest our $5,000 plus the dividends earned, and the annual dividend bumps up to $261 a year. And as you look down here, you can see that it gets bigger and bigger and bigger, increasing. This is a thing called compound interest. It's like a snowball rolling down a hill. It just gets bigger and bigger and bigger, and the more years you're in it, the bigger it's going to get. And if we scroll right down to the bottom, you can see how important the last sort of 3-4 years of this 20-year period are. If we go to year 17 here, the annual dividend is $30,000. Year 18, that bumps up to nearly $40,000. Year 19, it's $50,000. And by year 20, it's $65,000. So the last few years are the most important. As I said, that snowball effect, the snowball is getting bigger and bigger and bigger. So there you have it, folks. It's not as difficult to reach that goal of $53,000 a year. And now I'm just going to run over 3 simple rules in order to quicken up this process in order to get the most out of your dividends. So I'm going to share with everyone 3 simple rules that I follow in order to get the most out of your dividend investment. So, rule number 1, get invested. Don't worry about trying to time the market. There's so many people nowadays are trying, especially in what's going on with the world and the pandemic and the volatility of the market. People are waiting around for the market to go down, to get low, and then they're trying to get in and invest. Honestly, that's not the best idea. Just get your money in there. The longer your money's in there, the quicker your money gets in there, the more it's going to appreciate in value, the more that compound interest is going to start working for you. So don't start trying to time the market. There's a saying, and it goes something like, it's not about time in the market, it's about time in the market. And I genuinely believe in that. So just get invested, folks. It's really easy. Just don't even think about it. Just get some money in now and watch it grow. Rule number 2, and it's probably the most important rule here, make sure that you reinvest all your dividends that you earn. Don't be taking it out to go shopping with. Don't be taking it out to go to the bar and get a pint. Keep reinvesting all the dividends you earn into your portfolio. That way it's going to grow much bigger. The compound interest is going to work much more in your favour. So just don't even think about it. Just reinvest all the dividends that you earn. And the third and final rule, folks, for when you're picking dividend stocks out, don't just look at the dividend yield. Don't just see an attractive dividend yield of 9 and 10% and think, oh, that's the dividend stock that I'm going to pick. Usually companies with a higher dividend yield can't sustain that. What you want to do is you want to go and you want to check their payout ratio. This is how much of the company's profits are getting paid into dividends. If it's closer to 100% or even over 100%, then you know that company is paying too much money to their dividend investors, and the dividend therefore isn't safe and it's going to get cut. You want to be looking for anything below 60%, really. The smaller that amount is, the more chance the dividend's going to grow, the less chance they're going to cut their dividends. So make sure you look at the payout ratio and try and get it below 60%. Don't be just diving on a 4% dividend yield. That's not good. Look at Apple. Apple's got like a 1.5% dividend, and although that's not small, they've got huge potential for growth. So don't just look at the dividend yield, make sure you look at the payout ratio. And if you have any questions about that at all, please feel free to leave a comment underneath and I'll get back to you about it, or I can even do another video about it. So there you have it, folks. There's my 3 simple rules on how to make the most out of your dividend investment strategy. Alright everyone, so we're basically coming to the end of the video now. I hope everyone enjoyed it. I just wanted to show you how it is actually possible to reach financial freedom. The average Joe can do it. You don't have to be rich. It takes time, yes, it's going to take 10, 20, 30 years, whatever. But it is possible. And if you want to see me and my journey towards financial freedom, because I will get to financial freedom, it's just a matter of time. And if you want to witness it, please smash the like button and hit subscribe, and you can follow me on this journey. And I hope to give you some tips as well on how to achieve your sort of financial freedom. Again, if anyone has any comments, please leave them underneath. I'm new to this. I'd love some feedback. I'll get back to everyone. I'll answer everyone's questions. So yeah, please just leave a comment. But for now, take it easy everyone. Have a good one.